Nice end of the week, Mickey, with the markets up after being relatively flat for the week. What were the causes for that?
Well, really it was all about the tax bill, and it looks like it's going to pass. That was the big news. On Thursday, there was rumors that a few senators were pulling out, Marco Rubio being one, and then on Friday he got what he wanted with the child dependency, and it looks like he's back on board, and it looks like it's going to pass.
Fantastic. Also, we had a Fed rate increase this week. How much did that affect the market?
It wasn't that the Fed rate was going to have any bearing in the market because everyone knew it was coming. It was priced in the market at 25 basis points, which is what it was. It was more about what they said going forward, and they said nothing out of the ordinary. They didn't change any wording. So everyone's looking at, maybe there's not going to be any type of increases next year or very few, or, everything is kind of status quo. So if the economy keeps humming along the way it is, where we get some good news and a little bit of bad news here and there, the interest rate hikes might be over for a little bit, which then people feel the market will continue to go higher because you still can't get the yield in bonds. You have to get it in stocks. So that was another reason the market kind of moved higher after the interest rate hike.
Oh, fair enough then. Okay, let's assume that the tax bill does pass, at least as it currently stands and as it currently indicates next week. Is there anything else really before year's end that investors should watch for, or is it pretty much, the news of the year will be over by that point?
Now what happens, this is pretty much the news. Then we get, we're kind of in the Santa Claus rally. You get what's called some window dressing, where there's a lot of big funds, hedge funds, mutual funds that maybe will want to buy some stocks that they should have been already in, the Facebooks or Googles, and they want to get in their books to saying, hey, we own Facebook, Google, and you'll see some of those stocks continue to move higher. But usually we just get a continued, upside Santa Claus rally at the end of the year as we get a little more buying. But news-wise, we're pretty much done with anything that could really change the market. Of course, there's always worldwide news that anything could happen. But, hopefully we don't get any crazy tweets from our president that could change the market. But it seems like that's all been handled real well lately. So, I feel that it'll be a nice little steady climb for the end of the year, maybe a down day here or there. But it's really going to be all about the tax reform. And if there's any snags, that could really change the market. But if it goes as planned, we should be fine.
Well, knock on wood, no surprises on the international front, and that the tax bill, at least as it currently is planned, doesn't sort of surprise any investors to shake up the market. Let's assume that that's done and investors can stop looking at their portfolio on a daily or a weekly basis, and they can start really thinking about 2018. Mickey, I know you're very gracious of your time, even over the holidays. Let's get your contact information again so people can really take time to reach out to you during the last 10 days of the year.
Email me directly, Mickey, Mickey, at Investum, ENVESTIM.com. They can follow us on our Facebook page and see our daily market update videos, which is our Investum page, and follow us on Twitter at Investum1.
Mickey, thanks so much. We'll talk for the last time of the year next week. Have a good one.
You too, David. Thank you.